Okay, welcome everybody. Good morning. Happy Tuesday. Today we are also going live on our SPX Daily Plan together with Doc. So without further ado, I'm going to share our disclaimer for a very few seconds and then we're going to start. All right, Doc, I'm going to pass it on to you.
Okay, good morning, everybody. I've been having some technical difficulties. I am far from a techie, but we managed to figure something out that hopefully is going to work. So I'm just going to assume that you could hear me. So you'll see in the comments there, I put my daily plan. I put that every day in the Discord, and I'll kind of walk through the daily plan, looking at the chart and looking at some of the other tools that we have here, and kind of tell you what I see. I primarily do SPX. Well, depending on time, we'll also maybe look at some other, some other stocks. But okay, so first thing, like I say in my game plan, let's look at the context that we're in. The gamma exposure, the market makers, how much the market makers have to hedge is thinner because we had the large January monthly OPEX on Friday. Additionally, single stock options expired. So that's a lot of gamma, that's a lot of cushioning and range definition that has kind of left, Elvis has left the building, that is kind of not in the chain anymore. So let's just keep that in mind, that levels will be a little more fluid. But we are in positive gamma, and as I mentioned in my note, the call wall or call resistance or 1D max, whichever metric you want to use, has been grinding higher. And there's evidence of upside call speculation, and so market participants are buying the rally with their dollars. So that's clearly bullish. Additionally, we have earnings seasons coming up. So that's going to create some upside speculation in the, especially in the big names. That's going to spill over into the index. That's going to influence index volatility. That's just going to kind of keep things rotating around. I put the little earnings calendar in there. I happen to like Schwab, but that's neither here nor there. So with that said, the expected move when I looked at the option chain this morning was around 35. No magic there. I guess look in Think or Swim. You can look at whatever platform you use. It's going to have the expected move. As time passes, the expected move is going to be a little less. And so we can see that the 1D max, the kind of the max upside target, is roughly what the expected move was, and the downside target is kind of down here near where this, gamma 4 level is. And so in my game plan, I kind of go over my expectations for the day. And let me pull it up on another computer so I can kind of see what I'm looking at here. Give me 1 second, folks. Sorry. Okay, so I mentioned some of the key levels, and so I'm just going to switch to bar charts because it's easier. It's just easier to see. And again, not rocket science. We look at where the open interest is. So we have this open interest at 60.80 and 60.60, and those lines are reflected on the chart here. 60.60. I don't see the 60.80, but it's there. And of course, the 6100 is huge open interest. This 20 strikes doesn't cover the 6100. That's why it's not showing up here. And then it's always fun to look at volume and see what's going on. That's where the 6075 comes from. Huge volume. Are they buyers? Are they sellers? I don't know. I'm going to guess they're sellers. I'm going to guess that's going to be resistance. We know market participants selling options, dealers buy the option. That's long gamma, and that cushions the move up. To the downside, let's see what's going on here. Okay, so we have put open interest. The longest put open interest is at 5,900, round number, no shocker. We see pre-market volume of roughly 4,000 at 5,950. That's roughly 75 points away. So one would imagine that those are sellers, not buyers. We notice in general that the put open interest is low, which is bullish, but there's not much to stop us if we go down. Not saying that we will, but I'm saying if. Okay, so with that said, let's take a look at the roadmap. So, I started out my roadmap kind of at the default where like at around 5:30, whatever time it was when I was looking at this, pretty much where we are. And so if we can get moving to the top side, we've got resistance area coming up at that 60-35, 60-40 level right before the round number. If we can get through that area that I call the chop zone, then we have the battle for 60-50, the round number, and we can head up to the 1D max. 1D max doesn't mean it's impossible. There's no way on the planet Earth that we could get there. Just want to clarify that. I forget the stats. Fabio could tell you, I think maybe 75 or 80% of the time, whatever it is, that level holds. If we should break through there, we saw those 60-75 calls coming in, the assumption if they're sellers, and we should stall somewhere in there. To the downside, should we fail stall right up here? You see there's multiple levels here. That means that there's, multiple stacked, that they're stacked clusters over here in the 20, 25, 30 area. And so should we stall here, then we begin the descent down towards 6,000, battle for a round number. Then do we undercut that number and then kind of come back up and then kind of go back into that chop zone? Or do we kind of head back down toward this 59.80, which I'm going to guess was somewhere near a low on Friday, or what was a level on Friday? I don't really remember. And again, should this break, there's not much gamma to stop us. Now, there's traders that are probably going to buy it, but from a gamma point of view, there's not a lot to stop us. So that's kind of the rough plan. Now let's look at some of the other names. Let's take a quick look at the Qs. Qs are up nicely pre-market, and the Qs have room to run. They're through this call wall level, so we have in the money calls, and they are further from their all-time highs than the SPX, and so animal spirits being back, the Qs can lead the charge again. If you remember when last week we had some of the Mag 7 guys underperforming, and we had breadth expanding, and that's what kind of did the heavy lifting. Now it looks like we're back into the Mag 7 plus names doing some of the heavy lifting. Apple getting downgraded, getting beaten up. Nobody likes Apple anymore, of course. 2 weeks ago, you couldn't get enough of it. Now you can't sell it fast enough. Down 25 points since that recent high, more. Amazon Nice bullish move right to the top of its. Why is it not showing up? There it is. Kind of again. See, all of these are through their call walls. All the most of the Mag 7 stocks are through the calls, and so now we've got the next level up to go. There's really no stopping them. I put ARC in there. Want to take a look at that as kind of a default for animal spirits. We all know ARC, Kathy Woods, high growth, high beta, meme stocky, not tiny meme, but that kind of thing. So that's looking bullish as well. So I mean, everything we're seeing here looks bullish. I don't know about interest rates. I don't know about valuation. I don't know about percent of the Mag 7 to market cap, and how historically that's out of whack. The market doesn't seem to care, so neither do I. When they care, so will I. And again, Broadcom, similar story. Did I put it over here? I thought I did it. I guess I didn't do Broadcom. I'm pretty sure I did Dell. For some reason, I guess I didn't copy and paste it properly. Okay. Diamonds are moving up. See, everything is kind of through where the calls were. So these were likely calls, some calls that were there for February, likely call speculators coming in on Friday, buying near the money calls, and now we're through them. So potentially market makers have to chase. I wanted to take a look at FCX, but again, it looks like I didn't copy and paste it properly. Oops, oh well. Looking at commodities broadly as a sentiment for the economy, for world economy, I guess we could call it. I screwed up somewhere on the copy and paste job on some of these, which is not unusual for me to screw up on some of the techie stuff. So don't call me for tech support. IWM, in theory, should be the catch-up trade. It's got a lot of catching up to do. A reasonable target would be 230. Not sure on the time frame. A break of this level here down there, 222, would kind of be a risk-off kind of, close it out. Meta's got some room to run. Meta hasn't caught the bid that, let's say, an Amazon has. So that might have room to run up. We have this 625-ish, we'll call it, round number, resistance up here at 230. So that might be a trade idea. Okay, see, I ran these. I didn't copy and paste them properly. NVIDIA 140 has got tons of open interest in it. All throughout the chain, we look for NVIDIA, you're going to see that 140. If that can break, this thing can start to move. It's been holding like a champ. We kind of, sneak above it sometimes. A lot of times maybe in the pre-market or early trading, and then hedging kind of slams it back down. SMH, one of my frequent flyer trades. Love trading SMH. 250 was kind of the level, like the round number. Technically, the math adds up to 247.50. We're through this call wall here. A lot of open interest at 275 in the March expiration. I don't know that we get there. A lot of dispersion within this index with people buying NVIDIA, selling the index, buying Nvidia, selling that, selling the different constituents in the index. TLT, let's see what's going on with rates. Oh, so TLT is finally getting a move. Maybe the Trump tariff inflation narrative has cooled its heels just for today. And so that's broadly bullish, for stocks. Look at the 10-year. 10 years come down a little bit. Tesla, oh gee, I guess when you're the president's right-hand man, that doesn't hurt outlook. Not a political statement, just a real politics statement. So Tesla's looking strong. Let's see what VIX is doing. VIX below the critical 16 level. Now, if you were here whenever I last did this, I guess on Thursday, let's go back to bar charts for a second. And let's take a peek. And then I'll go to the dashboard in a minute. Let's take a peek at VIX. Symbol VIX. I just use bar charts because it's a handy, easy way to do the sorting. And so we have, I forgot to put in my note, it'll be in my note tomorrow. We have VIXpiration this week. Wednesday, the VIX options expire, the Januaries. Tuesday is the last day to trade them. And so we see all this open interest at the 20 calls. Remember a week or so ago, we were over 20, and that was kind of roiling the market. Now, we have some open interest here at, where's the 16s? I don't even see this, 16s. We have 1650 calls, 16s. We have some open interest here. So here's going to be the battle zone near 15, 16. On the put side, see the people who bought puts on VIX are the ones who are making the money. And we take a peek here, 15. So the 15 puts have a lot of open interest, a lot of volume, but they're cheapies. They're 9 cents. Let's sort it by strike so we can kind of see what's going on here. Let's do the sort the other way. So 16, 15. Okay, so here's where the battle line is on the VIX. The 16s, the 15 here. In here, bulls want VIX to stay beneath this level. The 17 puts are in the money. They're $1 now. And so this is where the battle zone is going to be with VIX. Let me just put SPX back in here again. Okay, now I'm going to switch gears to the dashboard. And let's go back to SPX. And so we see, just as you know, when we looked at the open interest, the gamma exposure for today, basically calls loaded with calls out into tomorrow, out into Friday. Now, Friday, we have a little bit of a mixed picture. And what I noticed here, and I mentioned this online yesterday, we had a webinar with Dan. I was like the special guest, kind of like Jimi Hendrix showing up at an Eric Clapton concert. I'm old. That's the quickest reference I could think of. We noticed that we have wingy speculation. We have out of the money calls and out of the money puts, and not a lot of action in between. And so that's a picture of uncertainty. And if we look at the delta, which is not correcting for market maker gamma, but where market participants are exposed, it's basically kind of no clear picture. Long calls, long puts, whatever it is, out and out through the chain, there's basically uncertainty. Okay, let's see if we can get a better view on VIX here. Okay, so we can have a clearer view of what's going on here with VIX. Now we see all these puts. And so to the extent we go up, market makers get to sell their short hedges against VIX, meaning they buy VIX, which cascades into the chain, and vice versa. As we go down, they short VIX. So just 15.5, 16 are kind of VIX levels to keep in mind. Here's the open interest chart. And you can see like the overlap right here at 15, 16, 17. And that's, this is where the battle zone is. Here the puts are in control. Below 16.5, the puts are in control. And if you're a bull, you want the puts to be in control. Of course, when we look at the delta exposure, we see it's call dominated because people tend to buy VIX calls. That's just what they do. That's the preferred hedging instrument. I'd like to take a look at biotech. So hold on, let me go back here for a second. Another sort of risk-on measure I like to look at is biotech, and it's been struggling to get over 90, and it kind of still is. 91 is where it kind of the gamma exposure flips, and it's just not there yet. CCJ, that's just a personal favorite. I'm bullish on uranium from some macro geniuses that I follow. And we see a lot of action here at 55 and 60. Call debit spreads were coming in for March, I believe it was. I like to watch the volume. And, you can see it reflected here in the open interest chart. We're over the 50 level, so that should be supportive. And we're kind of hopefully grinding higher. I say hopefully because I'm long. Okay, let's take another peek at Meta because that's one that might be a decent swing trade. Of course, Meta on the TikTok news, when they were banning TikTok, everybody got excited. And now that Trump's not banning TikTok, they're unexcited. And so Meta's kind of bouncing around on that a little bit. And we see we see the overlap here of the puts and the calls. We see the inflection point right here, which is kind of where we're at. So we can think of where we're at as a transition zone. So you can front run the transition, or you can wait for a clear sign of direction. I tend to be a front runner, full disclosure. Okay, IWM. Now, what's interesting about IWM, if you looked at this a week or so ago, the near expiry would look like this, all loaded in puts. Suddenly those puts, now gamma is dependent on distance from spot, so the puts that were out of the money have lost a lot of their gamma, so we'll look at open interest in a minute. But right now, everybody is bulled up on IWM again. We have this little inflection point right near where we are, which we looked at the chart. And in the monthly expiration, you see in the Feb monthly, there's still lots of puts. I like that because those puts decay. And as they decay, market makers get to buy back their short hedges. So I like seeing the boat tilted to one direction, but with enough ballast on the other side to kind of move us that way. Of course, there's rate cut narrative, there's an FOMC meeting, there's still a lot of stuff, technical term going on. If we look at the delta exposure, we see a lot of, the negative deltas are down here. We're at that inflection point. We see that confirmed over here. So depending on what you believe, we see 230 is that is that upside target out in time. Maybe it's a swing. 221 is the level we want to stay over. And so here's just a way to kind of look at some of those metrics, handy dandy. AMD has been a mess. Again, technical term. Let's go back and look at AMD over here. Okay, so it's finally got its butt over 120. So could possibly start to move a little bit. Let's take a look under the hood and see what's going on with AMD. Okay, so short term, we have some calls here. So that's those 120 calls, the calls up toward 124, 125. And we have these 120 puts. As we can get away from that, then this thing stands a chance. The net gamma picture, though, is still kind of buried. It really needs to get over 125 to have a nice flip. Then if you can just think dynamically as we go up, the deltas of these calls increases, the gamma exposure increases, this decreases, and the boat starts to tip in that direction. Looking at the delta exposure here, see, here's the turd in the wood pile. There's a lot of, maybe we can look in the chain another day, or I'll look in the chain and I'll put it in a note somewhere. I'm not sure what all these puts are, but that's going to be a tough road to hoe upwards. There's lots of puts that seem to be deep in the money, maybe from when it was all-time high. People bought puts. However, those deep in the money puts don't have a lot of gamma. Why? Because market makers are short all those shares. Gamma is greatest closest to spot. These are far away from spot. These are hedge short. So we can kind of, mentally sort of forget about that. SMH, I've been playing around with an SMH trade. I talked about it yesterday. I'll probably modify the strikes a little bit. I like this view of SMH because we can kind of clearly see where the levels are. And here's that inflection point. There's that 270, 275 upside target. Here's where the deltas are. We're in this positive delta zone. So, your upside targets are somewhere up here. And you see here, the convexity starts to kick in as we get up into here. As we get up near 260 to 265, convexity starts to kick in. Let me see if there's any questions or comments, because I can just kind of, Micron. I like the semis. They have a lot of beta, and beta is potential alpha. Beta is volatility of movement, alpha is outperformance. Micron 105. If those of you that have been listening and following along, we've been talking about this 105 level, and I'm guessing we're here. Okay, so 105 is going to be a little sticky, a little hard to get over. Now the question is, do market participants who own these monetize these, in which case we go down? Do we go up? Does the chain start to fill up into February? February is still a little far away to have a strong influence, and so we're kind of drifting a little bit. Oh, it's after 8:30 already. Okay, let's see if there's any. Clarify how you see SPX prior to 9:30 and expected move. Okay, so prior to 9:30, the trick, quote unquote, is on. Well, one, you can just add that you can see how much ES moved and add, subtract the difference between E-mini and SPX to get a, to see what SPX equivalent would have moved. But the trick is on TradingView, there's a symbol called SpreadX. If you type in SPX, you'll see SPX SpreadX, which basically accounts for the spread. Maybe not to the penny, but close enough for government work. And so that's where we see what it's doing. The expected move, that's kind of easier. Just go to any options chain and look at the expected move.
Yeah, and also, Doc, we can add, we now have intraday levels, so the expected move will update at 9:35. So
okay, so expected move will update at 9:35, right?
Yeah, so
So
we have the intraday.
I'm so used to looking at the chain. I haven't even looked to see on the dashboard is the expected move there from the expected move here somewhere.
Yeah, I can show you.
Oh, here it is. Well, okay, this was expected move, not updated based on Friday. So this is expected move from 3 days ago, and so this will update. But again, to find the expected move, just look at an option chain.
Yeah, and also you guys can go here and then go under TradingView levels, and these will update when the market opens. So right now we have the 7:45 timestamp. So pre-market at 9:35, we also will update the new snapshot. So you will see the updated levels right there.
So when I look at an options chain right now, and I'm afraid to share screens, I won't be able to get back here. It says 33.652 and IV 23.79%.
Yep.
And so that's where you can get that from. Like I said, I'm not a techie, so I'm afraid that if I move my if I open up a different window, I'm not going to be able to figure out how to get back here.
No worries. Let's see if we get more questions. Okay, thank you. All right.
Okay.
So it's 8:35. So for those who want to join us and access some of these tools that Doc showed you, you can set up a free account here, and you can also try our membership for 7 days to access all these models. The levels are updated once a day for the end of day and 9 times per day for intraday. So we will update the levels basically after 9:30 once an hour. So you guys can also see the updated data as the market moves, as the market opens today. Today is going to be a very important day, I guess.
And you see AMAT's running like a bandit since the Taiwan semi announcement. ARM, I didn't run ARM, but ARM is running too. ARM has earnings coming up, and that has a a potential for a volatility rush. This thing tends to run up into earnings. IV tends to increase. So one of the trade ideas that we do in the Discord, Dan, the guy I did it with yesterday, he was Eric Clapton to my Jimi Hendrix. He puts in a lot of these volatility rush and has different screeners that he does, and he uses the mental Q screener. I don't use the screener that much. I just kind of somehow follow everything in my head. That's just kind of who I am. Salesforce. Okay, I guess I didn't run it. It's apparently I copied and pasted wrong, and so I must have cut off a character that sort of killed that. One last thing, then I'll go. So I can talk about this stuff all day. And I do. In a Discord or somewhere. Okay, XLF, and again, we've been talking about it, at least in the Discord, since XLF broke out and pulled back down to here, to 45-ish, 47-ish area. We noticed unusual options volume at the 50s. Not rocket science, just look in the option chain. Think or Swim has time and sales. You can look in the chain, or just an underlying you're interested in. Just peek in the chain and see where the volume is. And again, not rocket science. You see 20,000 calls coming in at the 50 level for March. The assumption is that people are buying them. You know, could I be wrong? Sure, but that's how I roll. Okay.
All right.
When considering that's a move, you can calculate from the opening price. Correct. The opening move is from the opening price, and I'll take a peek at the expected move during the day. You know, let's just say if it's noon. I want to see where the expected move is. Oh, it's 15 more points. Just so I have an idea where the market is. And the expected move in the options chain will give me a little better idea on what market participants are expecting, and on skew, on the difference between what people are willing to pay for calls and puts versus VIX, which is 30 days out. You can look at VIX 9-day to try to get a more granular view. So I peek in the chain a lot just to see what that is. Okay, I'm going to let Fabio go. He's probably got another call. The busiest man in show business. And that was what they said about Elvis. And so the hardest working man in show business, excuse me, that was James Brown. Anyway, I'm going to sign off. Get Fabio, any parting words?
Thank you, Doc. Thank you, Doc, as always. Great stuff. For those who want to also see the note from Doc, we can go into Discord, and you guys can access all these channels right here where we publish all that stuff. We also have a lot of things that we do on the option side. So we have our option channel right here. We have some really interesting stuff right there. So as I said, the website is here. If you guys want to join us, you can create a free account there. And then this week, we're going to have some really interesting things going on. We have a lot of live sessions with Tim. We're going to have a session on forex next Monday. So stay tuned. Our daily with Doc right there. So thank you very much for joining, and thank you, Doc, for being part of it.
Thanks, everybody. Ciao.
Have a great day.